All right, folks, let's talk about the current structure of the silver market, or at least as Brian sees it. I believe we are currently operating in a bifurcated, basically we've got really two silver markets. And we could have this same conversation about gold, but I'm going to focus specifically on silver here. So we've got a paper market and then a physical market. And so that would be our first distinction or nuance layer of the silver market structure that we'd want to talk about or make a differentiation. Are we talking about a paper silver market? We talking about physical silver? It's two different markets, and so that's part of why part what I what I'd like to communicate in this video is that I think we are in the midst of some fundamental structural changes in the I'm focused on silver, but we could apply some of this to all of the commodities markets probably. There's some structural changes going on, but anyway, let's dig in another layer. So silver market, paper, physical. Now we're going a layer deeper on the paper side of the market. And so here in the West, we've got that's London, London Bullion Market Association, something like that, Metals Association. Anyway, it's the market in London. COMEX is New York. SFE is China, Shanghai Futures Exchange. So that's the paper markets. And then the point in this slide is that now, we've already made one bifurcation. So we're only talking about paper silver. Physical's a whole different story. And now we've got another layer, another nuance in the silver market where we have to differentiate. Okay, are we talking about paper on the LBMA COMEX, or are we talking about paper on the SFE? Because they're not the same thing. As I pointed out in the previous video, I believe that there is no margin on the SFE, zero margin, zero leverage. And so, excuse me, in contrast to over here, current leverage, I think on silver contracts, depends on the date. This is COMEX specifically, depends on the date of the contract, how far into the future it is. 32, maybe they up on 38,000 on with the latest, the third margin hike. It could be 38,000 margin. But anyway, there is a margin. You don't have to put up the full value of the contract in order to sell silver short in the futures markets. Not the case in SFE. And so in my mind, this is a significant differentiation between the two paper markets, Western and Eastern paper markets. Let's keep rolling. What else we got here? And then, okay, so now let's flip over. Now we're going to talk about the physical side of the market. Well, there's retail. And so I saw some of that yesterday when I was at the coin shop. Clearly that's the retail side of the market. And then obviously there's a wholesale, a wholesale side of that market. And, clearly they're not the same. The two different markets, they aren't the same products. To some extent, I mean, there's some gray area in there, but very distinct differentiation between retail and wholesale markets on the physical side of things. Let's dig a little bit deeper into that. And so when we look at, okay, it becomes a little bit clearer at this level. And so we're talking physical, and let's focus on retail. And so at the retail level, primarily what we're talking about is, it's small, less than 1,000 ounce bars of silver. So anything less than 1,000 ounces, that's what we're talking about. And there's the list you can read for yourself. And so that's kind of the retail market. But at the wholesale market, and maybe more appropriate to refer to this as the institutional market, whatever. It's 1,000 ounce good delivery bars at the wholesale level, which I'm equating wholesale level with the products that these people care about. There's only one product, and that's 1,000 ounce good delivery silver bars. That ain't what we're getting up here, folks. The grandkid is not coming into the local coin shop with 1,000 ounce bar of silver, which weighs 70 pounds, and turning that in. That's not that's not what's happening. It's the kid who's living paycheck to paycheck, and he's got a box full of grandma's sterling silverware, and he's seeing what it's worth. Not much, really. But anyway, clear distinction between the retail physical market and the wholesale physical market, in my mind at least. And so, okay, how do we get from the idea that I want to convey in this slide, how do we get from this side of the retail market to this side of the physical market? Or that's what I misspoke there. How do we get from this side of the physical market in silver to this side of the physical market? Well, clearly there is a refinery involved, because we got to we got to take grandma's we got to take her silverware and turn it into 3 nines. That's the 0.999 pure silver, and there's a refinery involved in there. And right now, those refineries across the world, doesn't matter where you want to talk about, refineries are backlogged across the world. And so that's one of the things that's going on in the physical markets right now, and it affects the paper markets, but we won't go there. But because of this backlog in the refinery pathway, people are selling their silver. I mean, I didn't see it yesterday. As I said, I was at the coin shop, spent almost an hour there. I didn't see a bunch selling. But evidently, people are selling at $100. Well, they've been selling for a couple of months now, because we just got to 100. But because there is so much retail physical metal being sold, the refineries are overwhelmed. They've got a backlog. And so at the retail level, people are not paying as much. They're not paying the premium at the retail level because there's already a backlog in the pathway. And so currently, according to Franklin Sanders, the premium, it's actually a discount in this case, on 90% silver, it's almost $10 per ounce below spot. Below. I'm not misspeaking. I'm not saying that accidentally. That you can currently buy 90% silver coinage for almost $10 below the spot price of silver, and it's because of this backlog. And one of the things that Franklin points out is that this premium or discount in this point, it's going to go away. And not only will it go away, within the last 18 months, it was plus $9 an ounce, the premium on 90% silver. You had to pay spot price plus $9 if you wanted to buy 90% silver. Currently, it's 9 below. You can find Franklin Sanders. He's online. He's he's an honest man. He and his son have a brokerage. If you're looking to buy physical silver, you might see what they got to offer. So we're talking about this pathway through the refineries. Got to go through that pathway to get to 1,000-ounce good delivery silver bars in order to satisfy these folks over here. You know, and you know, grandma sterling silver doesn't do anything for these guys who are currently facing a shortage of silver. They're facing a shortage of this. Grandma silver doesn't help them with their issues. I'm at 11 minutes, and I'm almost done. So I want to make this point and make it clear. In my opinion, the real price of silver today is the cost to get physical silver into your hot little hands. And so in my mind, that is it's the Shanghai Gold Exchange, the cost of physical silver at that exchange. That's the real price of silver today. Because anyway, there's stuff going on in the physical markets in the Western world. So in my opinion, that's the real price of silver today. Currently, I don't have that chart up. It's over $100. We've been running at $7 or better premium in China, and so Friday we closed in the West at say $100. It's at least 107 in Shanghai because silver's trading at a premium in Shanghai. So, and then speaking of Shanghai, this is my last point, and we're done. On January 1st, China implemented new export restrictions on physical silver. And so here I am saying that, well, that's the real price of silver today. But if you're in the West, you may or may not be able to purchase physical silver at that price because China ain't gonna sell it to you. And you know, it's just, I don't know, it's a different world, different silver market structurally, in my opinion. And I'm going to leave it there. Talk to you soon, folks.